Traders are buying the dip. That's our top story today on the Wall Report. I'm your host, Greta Wall. All three major indices are trading higher today, with the Nasdaq leading those gains just a day after closing in correction. The Dow is up nearly 400 points, with the S&P rising about 1.3% and the Nasdaq inching toward a 2% gain. Now, this rally comes as high-growth tech stocks are surging after being decimated in recent weeks. A Cathie Wood's ARK Innovation ETF is up nearly 6% today as key holdings in the fund jump. Tesla shares are up about 4%, while Zoom and DocuSign are both trading more than 3% higher. Now, this rotation back into tech comes as Treasury yields do pull back. The yield on the 10-year note is hovering around 1.8% after popping above 1.9% on Wednesday. Now, the market is also shaking off some negative economic news. The Labor Department reporting this morning that weekly jobless claims hit a new 3-month high. 286,000 Americans filed initial claims for unemployment benefits last week. That was up 55,000 from the previous week and sharply higher than expectations for claims to fall to 225,000. It's the highest since mid-October as well. Continuing claims did rise as well by 84,000 in the week ending January 8th. The data shows the spread of Omicron putting a dent in the strong labor market recovery that's been touted by the Fed. But the central bank is not expected to adjust its policy plans in response. And existing home sales tumbled last month as supply hit a record low. The National Association of Realtors reports existing sales fell 4.6% to a seasonally adjusted annualized rate of 6.18 million units. That sharply missed expectations for sales to be relatively unchanged. For the full year of 2021, existing sales rose, though, 8.5% compared to 2020. 6.12 million existing homes were sold last year, which is the highest since 2006. But supply is continuing to plunge. There were just 912,000 existing homes for sale at the end of December, down more than 14% compared to December 2020. That represents just a 1.8-month supply at the current sales pace. A healthy market balance between buyers and sellers typically has a 4 to 6-month supply. And as expected, that low supply continued to push prices higher. The median price of a home sold in December surged nearly 16% year over year to a record $358,000. The median price for 2021 overall also hit a new record at $346,900. That's up 17% compared to 2020, which is the fastest price growth since 1999. Now, the data shows that lower-priced buyers are continuing to be pushed out of the market. Sales of homes priced between $100,000 and $250,000 plunged 23% year over year in December. But sales of homes priced between $750,000 and $1 million jumped 32% annually, while sales of those priced over $1 million surged 38%. And rising mortgage rates are expected to make that issue worse. New data from Freddie Mac shows the average 30-year fixed-rate mortgage jumped to 3.56% this year. That's the highest since March of 2020 and up sharply from 2.77% just a year ago. The 15-year fixed rate, meantime, jumped to 2.79%. An analysis from Realtor.com estimates the higher rates will add $238 to a buyer's monthly mortgage payment. That adds up to over $3,000 more per year versus buying the same home at last year's rate, not even including the price gains. Remember, prices were also lower last year as well. Mortgage rates do closely track with the 10-year Treasury yield and will continue to rise as the Fed raises short-term interest rates. And Q4 earnings season is heating up. American Airlines was the focus this morning after United reported its results after the close on Wednesday. Both airlines are down slightly, trading flat after reporting smaller than expected profit losses in the last 3 months of the year. Both companies also forecast revenue will be lower than pre-pandemic levels in this quarter as Omicron delays recovery in air travel. The market is also looking ahead as Netflix is scheduled to report earnings after the close. The streaming giant's shares are rising about 1.5% ahead of that report. Netflix has faced increased competition amid the pandemic as traditional media companies launch their own streaming services. Many analysts are expecting the company to miss its own subscriber growth forecast of 8.5 million. The earnings report comes after Netflix announced price hikes in the US and Canada last Friday. The basic plan has now gone up $1 to $9.99. The standard plan now costs $15.49 instead of $13.99, and the premium plan is up $2 to $19.99. So are you still a Netflix subscriber, or has the surge in other options made you ditch the OG streaming service? Let me know in the comments. I still have Netflix myself, plus Apple TV, Hulu, Paramount Plus, HBO Max, and yes, even regular cable. We still have that here in this house. Be sure you're subscribed to my Coffee with Greta newsletter to get all the details on Netflix's earnings, plus a whole lot more in your inbox ahead of the open tomorrow morning. I'll see you all back here, same time, same place, for your Friday edition of The Wall Report.